Okay. Hello, everybody, and welcome to today's episode of Trade the Chain. It is Monday, June 14th, halfway through the month, and we thank you for joining us. I am joined by, well, looks like his hair got even better looking today, Ryan Gorman, our crypto analyst, Monty, and CJ from MarketRebellion.com. And on a side note, I do prefer Macallan single malt, you guys talking about rum and scotch in the chat. So, you know,
it's nice though, Alex.
What's that?
Nick at 15 years is a good whiskey, man.
Yeah. I can't complain. I mean, I've had them all. Don't remember them all, but I've had them all. You know, it's a happy Monday, no matter what CJ's face looks like right now. It is Bitcoin has breached 40K, which is really good. And it makes me question some of maybe the feelings I had. Now, we've only been above 40K for a little bit, but I've been pushing that if the market doesn't do a reversal by mid-month, we're going to extend the sideways trading all the way through August before taking the second leg. Is this going to sustain? I don't know. We'll have to hear what the experts think. But on a sad note, Ethereum is drastically down and not looking like it's going to recover. Just joking. We're going to hit it all right now in the big boards. Ryan, if you could take us to the legal, please.
Yes, sir. Everyone, this is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational and informational purposes only. This is not investment advice, and you shouldn't take it as such. And I mean, besides, why do you even listen to us?
We appreciate that you showed up. The education.
Yeah, we're happy you're here, but don't listen to us. Trade the Chain is brought to you by TradeTheChain.com, a global community of traders across 23 time zones, people. They're of all ages, all backgrounds, all abilities, and all using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you too want to trade like a crypto insider, head on over to TradeTheChain.com and check us out.
And then moving over to marketrebellion.com/crypto. This is Monty and myself and our community at Market Rebellion. With us, you get exclusive trade insights on a weekly basis, access to our macro portfolio allocations, a pro charting platform, a crypto trading education curriculum, some live webinars exclusively there for members as well. You can get all of that and try the first month for just $1 at marketrebellion.com/crypto. We got a mobile app as well, and we are constantly trying to add courses and give you guys the best tools possible to be able to improve not only short-term trading, but just long-term macro investing as well. But with that being said, looking at the Trade the Chain dashboard, we're up today. We're almost at 41K. We just got to like 40,900, got within like $50 of the 41K price level, and then just backed off a little bit. But pretty good sentiment, just pretty much more of the same, really. Nothing changing in terms of like the hourly or daily sentiment when compared to last week. So yeah, I mean, with that being said, what's up, guys? How's your weekend? Got anything to share before we get into the technicals?
I'm really happy for the people who put up with me and Rob for an hour and a half last night on the tube.
I mean, I was back in New York over the weekend, and you know, it's good to see the city coming back to life a little. It's there's people in the streets, all the restaurants are open, but it was cold. It was very cold at night. It made me really miss, you know, Puerto Rico, living in the Caribbean. I was so happy to be back home yesterday.
Yeah, this weekend was like the first time I actually kind of ventured out into the city, went out and got some food, and it was like COVID never happened. I was blown away by the number of people I saw, you know, out in lines for the bars down here in Chicago and in lines for restaurants. So it seems like things are maybe returning back to normal here.
It's crazy. Go ahead.
Same in New York. Same in New York, Alex. Like the lines for bars. There was the Strokes were playing at Irving Plaza, and like you could hear it from outside. I grabbed a beer and stood outside Irving Plaza for like 15 minutes, listened to the Strokes live. It was the first live music I've heard in forever. It was cool.
Yeah, but so they just extended the whole COVID precautionary thing in London for another month today, till middle of June. Do you know, I haven't been back home to London since last year. I mean, it's like, I don't know. Maybe, are we doing it wrong? Are they doing it right? I don't know.
Their numbers are spiking, though, I think. And they have a different variant that's much more.
It's a Delta variant. Was that named after the airline?
May have been. They've been carrying it all over the world. I didn't say that, by the way, Delta's lawyers. I saw someone say it on Twitter.
All right, let's let CJ get back to his job. He looks like he's having a tough day here.
But what does that mean, right? Like, think about all the people who go out in summers. Think about the saying in the stock market, sell in May, go away. People are going to be busy. They're going to be out. They're not going to be wired into their phones as much, which is kind of what I believe is why we might see some stagnation or just steady grind here for, some of the upcoming summer months. Then once people go back to school, the fall comes around, the seasons begin to change. I really believe that cyclical nature of Bitcoin and the seasonality has a play, and that's why I expect a face melting rally in the fall to winter or potentially even early spring next year. But it's going to be interesting, guys.
And summer is usually for DeFi. If we learned anything last year, so hopefully ETH has a chance to recover. It doesn't look like it's going to happen today. But maybe it's setting itself up nicely for a nice summer rally, hopefully.
Yeah, I do want to talk about ETH after we talk about Bitcoin, because I've been seeing a lot of people on Twitter talk about those June 25th expirations and what they might mean for price. So yeah, that'll be interesting to touch on for sure.
Cool. Let's get to it.
Let's do it.
All right. It's Bitcoin here. Why don't we start with the weekly chart, actually? Because we just got a new weekly candle last night at the close, when Asia opened up for Monday. And we ended it on a beautiful buy 9 candle right there. But not only did we do that, we also held the channel. We held the 20 smooth period moving average, which was really critical. This was actually the level, this 20 smooth moving average was the same level that we were able to hold during kind of the bottom of 2013. And then once we held that area, we kind of went and grinded higher and made that second double leg of the cycle. So we'll see if this is a interim bottom in terms of the weekly chart. I think it is, because we're just getting really great signals overall. This green one looks really nice. It's one that I would really like to long. We're starting to see the signs in the oscillators as well, not only with the Stoke, but also the CCI beginning to turn up. So really promising from a bullish perspective on the weekly chart. And that's why, from a weekly perspective, I think Bitcoin could definitely test back up into the 50s over the next 2 to 3 weeks. So that's pretty optimistic. But in the short term, let's discuss. So if you're using the bands to trade, last night would have given you a bullish entry right there and would have told you to go in, because these bands are starting to turn up. It's nice to see. And so not only can you use that top pink band as an entry, but you can also use it as a trailing stop loss if we can continue to go up like this. And then say we have one close below that top band, then that tells you, all right, we're probably going to continue to go down or something like that. So very nice that we're above the top band. But the thing that, and Monty knows where I'm going with this, but the thing that is kind of rough is that we still have an immense amount of resistance overhead. And, you saw me talk about the 20 SMA or the 20 SMMA, the smooth moving average, was going to be the white line on the chart you see here. We're running into resistance right there at that. Not only was that a very accurate support level, but it's also where we got rejected and made that lower high and then fell down. So that's going to be a very critical level at around 41K. And even more important is the red 200-day moving average, which is going to be immense resistance as well. So while the weekly chart looks really bullish, we still got a lot of resistance going into these levels. And the last time frame I want to hit here is the 4-hour, because I think we may be a little overextended in the short run, but let me double check, because I think we're hitting a TD9 on
Yes, we are.
The 4-hour.
Ooh.
So yeah, I mean, that's a warning signal. We saw the exact same thing in Theta Fuel when we were doing that analysis a couple days ago. And Theta Fuel came right down touched the moving average and then continued to go on higher. So who knows? We may see something like that. For me, it's very critical that we get above that resistance at roughly 41 to 42K. But if we can do that on strong volume, I think there's a high likelihood we test back into the 50s over the next 3 to 4 weeks.
Gosh, it wasn't that long ago that we were sitting here when Bitcoin hit 40 for the first time, thinking about it going into the 50s. Now we're just going back home.
It wasn't long ago at all, Alex, but it does feel like a lifetime ago. CJ, I want to zoom in even further and take a look at the hourly chart here, because this is something we've been looking at for the past couple of weeks. We were talking about it with...
You nailed the inverse head and shoulders. Let me just say that before you go in.
Thank you. Yeah, Nick Mancini showed me some love on Twitter as well for that inverse head and shoulders, and it did really play out to perfection here. So as you can see, we reached this point I was targeting here at 39.16K, and we actually continued to see some volume. What was most encouraging for me was the fact that we weren't promptly rejected here. We minted a sell 9. It wasn't a true 9 like what we're seeing on the 4-hour, and I'll get to that in a second, but it was a sell 9 nonetheless. I thought when we touched this level, we'd see a more prompt reversal to possibly retest this critical level just below 38K, or possibly to meet up with this 20-period smooth moving average that CJ was just referencing. But the bulls stepped up. People were willing to buy at this price, and even though some sell orders were getting hit just below 40K, people were still buying up Bitcoin relentlessly. And today, it's even more encouraging because look at this volume. The volume today has really picked up, and that's what allowed us to really propel up from this 39K level into the 40K range. It doesn't seem like a significant move, but it really is when you think about the number of traders that are likely taking profit right before this 40K level. There's a lot of reasons to believe that this is a significant level. CJ was talking about, the smooth moving average and the simple moving average on the daily chart and how they are, acting as resistance right above current price. So it makes sense that we're seeing some traders take profit. So the fact that we were able to actually continue to show some positive price action amidst a time when you'd expect traders to be, taking a significant amount of profit is always a very bullish sign for me. So I wanted to switch to the 4-hour real quick and touch on what CJ was just talking about, because I do think that that's important as well. So if we take a look at the 4-hour chart and we look at this TD sequential buy 9 or sell 9 that was just minted here, typically I would be inclined to agree that, we're a bit overextended here and that a reversal to this previous level of 39K is likely. What's going to be critical here is just watching this volume on the 4-hour chart. I think if this can keep up, and we can close this candle possibly in the 40K range or even just above this level of 39.19K, I think that would be very bullish for the rest of the week and really set us up for some nice price action going forward. And, if you look at this, we're seeing a similar head and shoulders formation, but this is now, beyond that, that upper shoulder on the other side. So I think today, in the second half of today, and what the Asian market decides to do, given this current price, is going to be really critical going forward. I would just really like to see that this candle hang out in this range, us not to close below 39K, and then possibly on this next candle, a break above this newly established critical level into the 41K range. And yeah, I would be completely happy. So weather's good. Bitcoin's performing good. I really have no complaints today, guys.
Go ahead, Ryan. You're on mute.
I am now. I'm not. a lot of that TA you're showing that Bitcoin's set up for a positive move in the coming week, I think is really well backed up by the sentiment data we have on Bitcoin, right? Earlier this week, we saw a spike in sentiment before price went up. And, just yesterday or over the weekend, right before price really started to recover, sentiment shot up almost near 80. And earlier today, sentiment shot up again as price rose. So I think, the mood and the outlook in the markets is really changing. And people are starting to see a lot of positives coming from what's happening in El Salvador, possibly what might happen elsewhere in Central America, including what Alex talked about yesterday with the thermal energy mining, right? So if there's a complaint that Bitcoin uses too much energy and it's contributing to problems with greenhouse gases, if you're starting to capture the power of volcanoes and use that for Bitcoin mining, that kind of takes that argument away. And perhaps that can start to replace some of the mining power lost when China really cracked down on miners. So I think, also Elon Musk's tweet earlier today or over the weekend, I can't remember which day he sent it, but saying that Tesla might start accepting Bitcoin payments again.
We don't mention him by name anymore.
Yeah, Alex, you went after him on Twitter, my man. You clapped back. I like that.
I'm sick of his crap.
Elon Musk. No, but like that's a positive development for Bitcoin if large publicly traded companies start taking it for payments again. Right? Even though the Bank of England would disagree with its use as a payment vehicle, I think overall there have been so many positive developments for Bitcoin and for crypto over the weekend and since the conference in Miami that it's only a matter of time before sentiment and outlook, start to turn around and the markets start to reflect that optimism.
Yeah, I mean, I agree. I think the whole volcano thing is cool. As I said, I think Market Rebellion, Trade the Chain should go in for naming rights since FTX got the Miami arena. We could get the naming rights for the volcano. I just want to see how they're going to harvest that energy, right? I'm curious on how you do that from a volcano.
Thermal. Like you use the heat. It's been done before elsewhere in the world, so this isn't like a novel idea.
Well, Iceland uses it, but they have a regular valve. Like the Earth has its own natural valve that keeps coming off at a relatively stable pressure. There with a volcano, isn't it like all on or all off?
I'm not sure, but I do know it's possible. I'm not a geologist here. I wouldn't claim to be one.
Didn't you ever watch Dante's Peak back in the day? That movie with Richard Pierce Brosnan.
I feel like I'm listening to George Costanza pretend to be a marine biologist.
I want to go into Ethereum. I really do want to hear Monty's view on it because Ethereum has shown to disappoint the last 36 hours. A lot of people are really upset.
It's up 6% over the past 24 hours. It's not like it's tanking.
No, definitely not tanking.
It's not tanking.
When you see that sort of move in Bitcoin, and like you mentioned with that tweet from Elon Musk, typically I think there'd be a larger pop in ETH just because of the nature of crypto. But we didn't really see that today. It was kind of all the attention was going into Bitcoin. And I think part of the reason for that is just the fact that ETH is the sentiment for ETH right now is not that great. There's a lot of talk about the options that are expiring on June 25th. So I want to quickly reference that before I get to the charts. But on June 25th, ETH will face its largest options expiration in 2021 with $1.5 billion worth of options open interest being settled. So this is 30% larger than the last time, the next biggest, which we saw on March 26th. And after that happened, price corrected steeply the 5 days after that options expiration. So if history does repeat itself, it's likely that we're going to see some bearish price action following this options expiration. And one thing that I've been referencing, over the last couple of weeks is sort of the divergence we've been seeing in the technicals between ETH and between Bitcoin. So if I quickly just I want to pull up a side-by-side with the Bitcoin chart, because I think that if you take a look at let me just add the moving average here. If you take a look at where the simple moving average is for Bitcoin, the 200 period moving average relative to ETH, I think it paints a pretty, clear picture about the oversold and overbought nature of these two prices. So this red line here is a 200 period SMA. This pink line here is a 200 period SMA. And as you can tell, ETH is still significantly above its SMA, whereas Bitcoin is below it and the SMA is acting as resistance. So what I'm expecting is following this options expiration, I do expect some volatility to the downside. And I think that we're going to start to see ETH's chart start to look a lot more like this, where we cross below the moving average and start to and have it flip from support to resistance. We didn't really have too much time for it to act as support. I would argue that this one massive wick right here on this buy 9 was, largely bolstered by the fact that this moving average was getting close. But the fact of the matter is, I think that, looking at these two assets and how they've performed historically, and historically they've moved very much in tandem. I think following this options expiration, we'll see that parity again between Bitcoin and ETH in terms of their placement relative to the moving average. So as of right now, I am, pretty bearish on ETH over the next couple of weeks.
Okay.
You and a lot of other people too, right, Monty? Sentiment on ETH, as you were saying, is not great. It's nowhere near as high as it is for Bitcoin. It's mostly red. And you have a lot of DeFi projects that have been jumping from ETH over to Polygon. And it just feels like the momentum behind ETH and behind ETH-based projects is starting to slow, not quite evaporate, but slow down. What do you make of, the migration to Polygon? A lot of these projects are undergoing.
Yeah, that's something that we kind of touched on briefly with Nick, the fact that because of the delay of ETH 2.0, I think a lot of the retail money is going to migrate to some of these ETH competitors, and that makes sense, right? But one thing that I think sets ETH apart from those competitors is the fact that it is already starting to garner some institutional interest. I saw an article today that, Goldman was looking at perhaps starting a fund that is heavily weighted in Ethereum. So I do think that, because of the longstanding nature of ETH and because of the diversity of projects on it, it's a lot more appealing to institutional investors and big time players. But I agree that in the meantime, you have chains like Polygon, like AVAX, and even like Binance chain that I think will steal a lot of the volume away from ETH because there's just a lot more. Retail traders look for potential, and the potential doesn't seem to be in ETH right now because of that delay of ETH 2.0. I think the catalyst for an upside with something like Cardano even is a lot higher. You just build one project on there and that thing could skyrocket because now it has true utility. So yeah, it's going to be, I think the tale will be told by the retail money and where they decide to park over the next few months as ETH corrects.
It's funny that you mentioned institutional money, right? Because according to CoinShares data, last week, ETH had more outflows. There were more outflows from ETH-based funds than there were from Bitcoin-based funds. Now, it was only 12.7 million versus 10 million, but when you compare Bitcoin's market cap to ETH's market cap, that's kind of staggering, actually. Like the loss, and you're not going to have as much AUM in ETH funds as you would in Bitcoin funds because they haven't been around as long. There isn't as much circulating supply. So, I mean, I think, institutional money is also starting to lose faith in ETH with the announcement that 2.0 is being delayed, because that outflow did coincide with Vitalik kind of saying, yeah, we're significantly behind schedule,
I mean, I just listen. I think ETH has a long way to go before it diminishes in any substantive manner. Even with this 2.0 delay till the end of next year, which is I find absolutely ridiculous and really putting them at exposure for losing market share that I keep regurgitating. But the point of the matter is, with all the new retail money that's come in, Ethereum-based projects and Ethereum swapping, no matter how high the gas fees, and the London fork is supposed to suppress some of those gas fees, is still what the new person works with. It's the easiest thing. ETH gets all the credit for bringing non-crypto people who've entered the space the usability of all these projects and trading. And you're not going to get that adoption from Cardano and Polygon, not now, not in the near future. It's just, it's for Degans, quote unquote, I mean, that's where the experienced people are going to go.
Yeah, I think Alex is right. I'm really not that bearish on ETH whatsoever. Like, this is a very we're getting back into risk on territory. You have the equity market doing very well. You have the NASDAQ continuing to make all-time highs with the S&P. Like, retail money is going to come in. It's just going to come in to Bitcoin first because it's the most risk-off asset. And then slowly it creeps into Ethereum and, those ignition assets at the tail end of the bull cycle. Like, we've seen this so many times. Like, I remember thinking when we were initially on the climb up, when Bitcoin was first hitting like 30,000, 40,000, and ETH wasn't doing a whole lot. And then it just exploded because it was like that kind of slingshot effect. So what I think now that's going to happen is like, sure, ETH might stagnate if Bitcoin goes up, but it's not going to go down unless Bitcoin goes down, in my opinion. I don't see some type of decoupling where Bitcoin continues to go up and Ethereum decreases. Like, this is a risk on space. People are getting back in.
Yeah.
Those old ignition assets, my favorite phrase.
I love the phrases that
It's
come
a
up
lot
in this
polite.
show.
It's a lot more polite than saying shit coins. I'll tell you that.
Oh boy. Okay, let me address the elephant in the room. Listen, guys, VGX, we're not going to go over it. There's nothing to go over because we're waiting for a token swap to come. There's that. So that's what everybody's waiting for. Do we still like it? You've heard Monty and CJ self-declare their love of VGX in the past. So there's really nothing material to go over with VGX until that swap happens.
No new news.
That's all.
No,
Yeah.
no.
But we're not haters. We're just not talking about it. We all hung out with Steve in Miami. Love him. Love the company. Love everything about it. VGX to the moon. I use it every day. Oh gosh. Okay. So what do we listen? Let's talk about the Goldman thing. I find this interesting. Ryan, what's that?
It's not Goldman. It's a hedge fund. It's not Goldman.
Oh, I thought it was Goldman Sachs.
No, it's
Okay.
a quant fund, but still, I think it's fascinating.
Could you read for anybody watching, if you are a quantitative crypto dude, this might be for you. Ryan's going to read out this really well put together ad.
Yeah, so Syndicator Capital, that's CI Syndicator Capital, they're a quant fund, and they're looking, according to Bloomberg, directly to Wall Street bets to hire sentiment traders. You know, our community is filled with sentiment traders, so maybe they should look there. There's quite a few very proficient ones there, prolific even. But, the job description here, they want someone who has 3 years of active trading experience, having been a member of more than Wall Street bets, of Wall Street bets for more than a year with Karma, apparently, which is a Reddit measure of how good the user has done. And you have to have more than 1,000 Karma, right? And bonus points go to those with a refined taste for memes and a sense of humor. Okay. Anyway, so I think the best part of this whole thing is in the job description. It says the select few chosen by Syndicator should expect to spend most of their time scouring Reddit, Discord, and Twitter, like most of the Trade the Chain community does, and to keep their finger to the wind of the fickle retail market while doing their best to keep the fund's risk management team from having a heart attack. So basically, anyone from our community, if you're keen on becoming a portfolio manager or a hedge fund trader, they're offering a $200,000 base salary with performance bonuses of 30% of profits generated. That's not a bad way to get your foot in the door.
Listen, I know the guys at Syndicator. I remember when that was all just a dream in somebody's eye. So that sounds like an open employment ad that they would write.
Yeah, that's great. I mean, it's a hilarious ad, and they're targeting a very specific audience, which I think they did a very good job. And the fact that they got it on the Bloomberg means they're going to have a huge amount of eyeballs in front of it. And this just goes to show the power of sentiment, the power of community, and how Wall Street is now starting to take seriously what we've all been talking about for well over a year here. And it's not just in crypto markets; it's also in traditional equities. As Wall Street Bets has shown. And if it can work in one asset class, it can work in another, I guess. So what do you guys think of this? What do you make of all this?
I'd rather talk about like Shibu Inu.
I need to add my Reddit Karma to my resume.
Guys, so we're not going to talk about a rocket, a coin with a rocket in the word. I'll tell you that right now. There's really nothing actually.
What's the other half of the word, Alex?
I'm not going to say it on the air. This is a family-friendly channel.
The opposite of leave.
Okay.
And I want someone to type a comment or what?
I just said in the comments, this would be like Alex getting a job at Marlboro as a smoke analyzer.
Thanks, Rob. Thank you very much.
Nice.
I want somebody to explain to me in the comments or to us as general, because I don't want to get CJ all worked up. He gets worked up over these things, but explain the case behind Shibu and behind something Rocket. and why we or anybody else should talk about it, with the exception of just shilling and pumping it so that it can dump. Because I don't see one. At least Doge has its own blockchain. Okay.
And it has some fundamentals, as CJ proved one day.
Oh, CJ actually performed fundamentals. If CJ can perform fundamentals. DYE Invest, any cent news, actually on the channel, there's a member only AMA from Trade the Chain that's posted where we went over cent news. It's public. It's getting listed this Thursday on Bitcoin.com exchange. So anyway, let's
big
move
news,
on.
Alex, and you just kind of glossed over that. Getting listed on Bitcoin.com exchange. Look at that. Big things for our community.
We got big professional market makers coming into the mix now. So let's see what happens. What do you want to talk about, Ryan? What do you got? You've been off the show for a long time. You know, I mean, it's like
not by design. I've been traveling a lot between Miami and New York, and some family things. You guys pretty much do a great job of covering all the things that I'd want to talk about every day. I thought the volcano mining thing was pretty cool, but yeah.
Point to bring up, if you guys don't mind.
Oh, well, please go right ahead.
By all means.
One thing we haven't touched on was PTJ, Tudor Jones talking about Bitcoin earlier today.
Oh, yeah.
That's CJ's hero, people. That's CJ's trading hero right there.
Go watch the documentary called Trader, Paul Tudor Jones on YouTube. And it's amazing. It's when he called the 1987 crash based on metrics from 1929. And it was that was like his big come up. And it was pretty cool. Now he manages 5-10 billion in assets. I
wanna say something, because I do love CJ, and I haven't seen CJ post too often lately about this. He does the old timer stuff and brings us back to the old days in his tweeting, which is always really cool. And I saw he put a clip of Peter Borish and Paul Tudor Jones on, and I know Peter Borish. I've known him for years. Works for a fund downtown FIDI in New York, and every time, and Peter Borish is one of the co-founders with Paul Tudor Jones of the fund, and co-founded Robinhood, which is like the biggest charity hedge fund event in the world. I need to bring you in to meet Peter, because you sit down with him and you just sit behind a boardroom table and listen to all the stories of those days in the 80s. It's freaking fantastic.
Oh yeah. I mean, he's the partner of PTJ, and just the style and just how great those guys have been in terms of like their philanthropic endeavors and what they've actually done with all of that accumulated wealth. So it's like that's what I want to be when it comes to like impact overall and like giving back to society. But we're getting a little off topic here. I wanted to show something else about Bitcoin, specifically with longer term holders, because of course we had our Glassnode report come out this week. I thought this was a very interesting chart. This is the binary CDD, which is let's see, it's essentially longer term holders and whether or not they've been spending coins or essentially taking profit of their longer term holdings. And so you can see that we did have a very large spike as we initially went up. People really took profit because they saw the parabolic nature of the trend. Now we're just not seeing that. So I can give you a bigger view here. We're seeing that kind of reset period to back before we really started pumping. So this shows to me that longer term holders who typically are a bit wiser just because they've been in the market a little bit longer. That's the general assumption of on-chain analysis. These guys and girls are, I think they're thinking about accumulating, or they're not content selling at these levels, I think is what we can take from that.
There are a lot of metrics right now, CJ, that are pointing to the fact that this is an ideal time for accumulation. I think that may be the most powerful, because like you said, the old money in crypto tends to be the smart money. And when you see those coins stop moving, that's typically indicative of a good time to accumulate.
I love how we've gotten to the point in crypto that we're now talking about old money.
The Monty's old money.
True.
All right, let's hear the Metcalf's law thing. Can we, because I've thought about this a lot.
Did you watch Ryan's Ryan, didn't your video came out today, right?
Right, but we didn't
it
talk
came
about
out.
Metcalfe's law really. We had some technical challenges at the beginning of the video, and a bit of it was chopped off the interview. But I know that CJ and Monty disagree with me vehemently on this.
Hold on. Maybe just let me lay down my simpleton case.
Yeah, sure. Go ahead.
You can tell me how I'm wrong, or maybe educate me.
I don't know that you're wrong, or that I'm going to educate you. You're the one always educating me. But this is just how I see it,
Okay.
Hold on, guys. Let me go get some popcorn real quick before you guys start.
So, like, when we think about Pat and his analysis to VGX,
which I firmly disagree with.
Okay. So that model and like VGX increasing as more users come onto the platform, it depends on something known as what he defines as token efficiency. So people have to be buying, in order for the price to go up when they join the network, obviously. But when people join the Bitcoin network, the token is got immensely high efficiency because you have to buy the token really if you want to participate in the network. So if you kind of zoom out and really think about that, of billions of users over the next 10, 15 years who join the network, sure, in the short term, you're going to have whales who have millions of dollars of Bitcoin, maybe even billions of dollars of Bitcoin cash out, and you're going to have millions of new retail investors come in. So I understand that kind of balance, but overall, when we talk about like 10, 20 years down the road, I feel like the correlation and the relationship has to exist just by nature.
I don't disagree with that line of thinking. I just don't think that just because more people are using Bitcoin, the value of it goes up. It hasn't really panned out, right? I mean, if you look at this Glassnode chart,
Look at that
no,
chart.
it hasn't. I'll show you how it hasn't. Right here, the number of wallets with non-zero balances is at or near an all-time high, right? Why isn't Bitcoin at or near an all-time high? Right? So if more people buy into Bitcoin and the more people that use it, the more valuable it gets. This is from last week's Glassnode blog. How is Bitcoin not at an all-time high?
The peak of that all-time wallet addresses did coincide with an all-time high for Bitcoin.
Sure, absolutely. But look at this. It doesn't coincide. If you zoom out far enough,
that is a correlation right there.
Ryan, you want to know why price dropped? It's because a million traders got liquidated and it resulted in one waterfall. So fundamentally, we're below Bitcoin's, realized Metcalf's value because we have derivatives traders that move the price around very rapidly in the short term. But overall, when you zoom out, the Metcalf's law relationship is just so evident, you can't ignore it.
That's because every time Bitcoin's price spikes, more retail traders FOMO into it, and you have more active users because the retail money that comes in at the end is often new users who are buying it because they don't realize that it's not going to keep just going up, right? So it's not that hard to find a correlation after the fact. When you look at this chart, every single time you never see a spike in wallet addresses before Bitcoin hits a high. You see it after it hits a high. Right? So that's people coming in at the late stage of the bull rally, right? That doesn't mean causation, doesn't mean correlation here.
Oh, and 100%. I am not implying that one is causing the other at all.
No,
I'm sorry.
Just because more people have used it, that doesn't mean that there's a correlation, right? Because more entities will always transact in Bitcoin as the price of it goes higher. But the momentum, it immediately evaporates when smart money sells at the top and retail bag holders end up losing their shirts. This happens time and again. So I don't see the correlation, and I feel like there's more of a correlation and there's more logic behind looking at it through Lindy's law, right? The longer a non-perishable thing survives, its life expectancy increases. Bitcoin really fits that, I think, more because if you have one person who can move the markets like Elon Musk, that's not Metcalf's law. That's just, okay, fine. This thing's been around forever, so it's not going to die.
Yeah, I mean, we're arguing two very different things.
No, we're not. I'm saying that I feel like
the long-term versus the short-term, because you're talking about like one little sell-off, and
It's not one sell-off,
sharing?
it's
Do you
multiple
mind
sell-offs
if I-
over the course of the history of Bitcoin, right? You know, Elon Musk has more control over Bitcoin simply through his control over society, which greatly outnumbers users, which greatly outnumbers Michael Saylor's impact. And the volatility that Bitcoin has pushes it really away from Metcalfe's law and upholds Lindy's law more than anything else. I mean, even if market tops, they bear out the network effect idea, right? But if you look at the overall performance of Bitcoin, just because market tops can correlate to one theory doesn't mean that that's the theory that rules Bitcoin as a rule, right?
No, there's definitely, you're not going to find one theory that dictates the price of Bitcoin or anything. Correlation or causation is almost impossible to prove, and it's very hard to find. But what I'm arguing is the fact that as more members come onto the Bitcoin network, think of it like, the more people that are using an iPhone, the higher Apple's stock is going to be. It's not going to be like immediate. It's not going to be like a report comes out that, 1 million more people are using iPhones this week than last week. That may not immediately bolster the price, but there definitely is a relationship between the two. And I'm sure that could be proven. And the chart with, Apple's stock price and the number of people using iPhones probably looks almost identical to this chart that CJ is showing now. So
you're taking Metcalfe's law and you're applying it to users, revenue, and let's say account metrics, for lack of a better way to put it, right? That's what Metcalfe's law is. And now we're taking that and we're trying to apply it to a currency. To me, it seems like a fallacy. I'm not buying it at all. I get how it applies to Apple, and I get how it applies to a product that's bought and sold and offered, or a service. But Bitcoin is not a product that's being sold by a specific entity. It's a currency, crypto or otherwise. So I just don't see how this correlates. I disagree with this entirely.
I want to go back to this chart that you actually used in your argument, because I think it's actually the best evidence for the fact that Metcalfe's law does actually apply to price. If we corrected substantially and this number of new users was unaffected, then I would agree that, Metcalfe's law has no bearing on price and vice versa. But this was the most significant correction we've seen. And we also saw a downtick in new users. That is exactly reflective of what you'd expect in such a steep sell-off of price. So I think when we see a even further correction, which will happen after we get that parabolic run-up, we will see a much steeper fall-off in new users. And I don't think that the fact that, when price goes up, the number of new users goes up, that's not a coincidence. It's bolstering the value of Bitcoin by adding more users to the network.
No. The value of Bitcoin would have to go up after the number of active wallets go up for a Metcalfe's law to be upheld. These people are just chasing the tail end of the bull run.
It would only have to, for it to be a causation, that would have to be the case. Okay. They are related and they are correlated, but one does not have to lead the other.
Okay, so that's like, okay, fine. Tulips, right? That must have been Metcalfe's law as well. Everyone bought into tulips and started speculating, and then all of a sudden the price went through the roof. Are you saying
yes, it was?
Thing?
Yeah, exactly. Okay. The number of people that were buying and using tulips did correlate to the price at the given time. And then after the price went down, you can guarantee that the demand for tulips and people that were buying tulips did go down as well.
Okay, of course. But the number of people getting into the tulip markets trailed the price going up. Same as it does in the stock market, because that's like saying the more people that buy stocks and hold them, the value go up. That doesn't always equate to that.
No, I agree. But just because one trails the other doesn't mean it's not a correlation. It doesn't mean that it's an important metric that is contributing to the other.
It would have to lead to be an indicator for me. Like, it would have to lead. You'd have to have wallet addresses leading price versus price leading wallet addresses. I don't see how this bears out.
Things, I don't know where this is going, but when Digital Asset News is throwing $5 into the chat, things are getting hairy. Thank you very Jeez, you guys almost created a false SBI reading. I was about to go take a cigarette break and grab one of these puppies, but I like the argument. You know what I think we should do? I think maybe we should bring Pat on here, Ryan on here, Monty on here, and CJ. I don't. He doesn't want to be on here for that. But
Rob just said in the comments, not to cut you off, Alex, but saying Metcalfe's law might be a lagging indicator, just like the 200-day SMA. That's not how Metcalfe's law.
That's not how Metcalfe's law works. I'll chime in about.
That's not how it's ever been used or explained to me by anyone, unless it fits the Bitcoin narrative. Like, it just doesn't make sense.
Bitcoin, okay. So Metcalfe's law, all that it implies is that there is a correlation between the number of users, the efficiency of an asset, and the price of that asset. All of that seems completely evident and clear to me in Bitcoin. So, in my opinion, it holds up.
Yeah, I think you're just interpreting it wrong, Ryan. Like, you think that people, like, we're not saying, there's going to be tons of users. Like, that's just what we've seen. But to deny the correlation or deny the relationship between those two is just not.
If we're saying it's a network effect and we're saying the price goes up because of more users, then how are new users trailing the price going up?
No, but that's not what a network effect is, though. A network effect doesn't cause price to go up.
But you're saying that the more people that buy Bitcoin, the higher the price goes. That's exactly what everyone says.
Yeah, because the only way to participate in the network is to buy the asset.
Oh my God. No, that's not it. That's not the only way to participate in the network. You don't have to buy and hold Bitcoin to participate in it. Look at Robinhood. Look at all those people. Look at all the crypto ETFs coming out where you can just buy, you can buy stocking companies that hold crypto without actually holding Bitcoin. That's not the only way to participate in the market.
Yeah, but Ryan, would you not acknowledge the fact that there are significantly more of those than there were 5 years ago, implying that those two are somewhat related to Metcalfe's law?
No, I'm not saying that it's completely inaccurate. I just don't think that Metcalfe's law is what's going to bear out Bitcoin's ultimate price action. I think that applying it as a lagging indicator, I could apply any theory I want as a lagging indicator and find a way to correlate it to Bitcoin's price. I could. It's not that hard. Give me time, I can do it. I could apply gun sales to Bitcoin's price if I really want to.
Then do it.
Okay. Okay. No. We're not doing it now. We're not doing this show.
Apply Metcalfe's law to it. Give me a day.
Come on. Let's save this conversation for another day.
No, this is the last time we're talking about this.
Geez, I felt like I was at that Paul Logan fight. Okay, so I don't know who the YouTuber was in that right now, but
JC, thank you for those comments. I love my fans.
Oh, geez, guys, I gotta go like hop in the ocean or smoke a cigarette or take a pina colada up the nose. I don't know. But thank you all for putting up with us through that. We always love debates. Not everybody's going to be on the same side of things, and that's really important to understand, as well as, crypto Twitter and all the rest of the social media when people get into fights. But listen, guys, I'm really at a loss of what to say and how to close this show up, except for the fact that if you guys put in the comments, not in the chat, but put in the comments a project for CJ, Monty, and Ryan to look over, and we'll choose one out of the hat to do this week, because I just hang on to your handlebars, kids. I will see you tomorrow. Have a good day, folks. Take it easy, and thank you.